A lot of the most urgent security problems today are happening low to the ground, where drones and autonomous systems are changing the rules fast. Low-altitude airspace is becoming a real security issue around airports, borders, stadiums, and critical infrastructure. Today, we're breaking down Ondas Holdings, ticker ONDS, which is trading around $10.68 as of late January 2026. Though prices can change, we'll cover what the company actually sells, why the recent momentum happened, the dilution story, and the real risks under the hood. Quick reminder before we go any further, I'm not your financial advisor. This video is for educational and informational purposes only and is not financial advice. Penny stocks and small caps are very risky and you can lose all your money, so always do your own research or talk to a licensed professional before making any decisions. Ondas today is very different from what it was a few years ago. The company originally focused on industrial wireless connectivity, but it has since pivoted hard into autonomous systems, counter-drone technology, and defense-oriented robotics. Most of that now sits inside its Ondas Autonomous Systems division. Instead of selling a single drone or sensor, the company is trying to build what it calls a system of systems, meaning aerial drones, counter-UAS tools, electronic warfare, and ground robots all tied together through one software-driven command layer. And the timing matters. Governments are tightening sourcing rules, drone incidents are increasing, and defense budgets are increasingly shifting toward integrated counter-UAS stacks rather than single-purpose gadgets. At a high level, Ondas is trying to solve one core problem: how organizations monitor and control low-altitude airspace and nearby ground environments as drones become cheaper, smarter, and more widespread. Let's break down how that stack actually works. The aerial side starts with the Optimus autonomous drone platform, developed through the American Robotics and Aerobotics acquisitions. According to company disclosures, Optimus was the first small unmanned aircraft system approved by the FAA for fully automated operations without a human operator on site. That regulatory approval matters because it's one of the biggest bottlenecks in this industry. Certification takes time, money, and a strong safety record, and it can create a meaningful barrier to entry. More recently, the company has reported that Optimus received Blue UAS status from the U.S. Department of Defense. That designation means the platform is NDAA compliant and cleared for certain federal procurement pathways. In a market where foreign manufactured drones are increasingly restricted, Ondas is positioning itself as a domestic alternative. Now here's where it gets more interesting. Surveillance is only one piece of the problem. The next layer is counter-drone defense, and that's where the Iron Drone Raider comes in. This system takes a kinetic approach to drone interception. Instead of jamming signals, it uses an autonomous interceptor drone that physically captures a hostile drone with a net and brings it down safely. That approach is designed for sensitive environments like airports or public venues, where electronic jamming could interfere with GPS, communications, or civilian infrastructure. According to company statements, the Raider has been deployed in operational environments, including a multi-million-dollar order tied to a large European airport security program. That's the hard kill layer. The soft kill layer comes from the Centrix acquisition. Centrix focuses on what it calls cyber over ARF technology. Instead of blocking signals, it operates at the communication protocol level, detecting, identifying, and, in some cases, taking control of unauthorized drones and forcing them to land. Based on company disclosures, Centrix has deployments across multiple countries, giving Ondas an existing international footprint in electronic counter-UAS. When combined with the Raider, this creates a layered defense approach. Try protocol-level control first, and escalate to kinetic interception if needed. So the question becomes, can they sell the full stack? That's where the unified command and control layer comes in. Ondas is trying to tie all of these tools together, aerial drones, counter-UAS sensors, and ground robotics, into a single operational interface. The idea is to reduce operator workload and shorten the detect-to-defeat timeline. On the ground side, the company has also expanded through its Apero Motion unit, which provides ruggedized unmanned ground vehicles and tethered UAV systems. These are aimed at persistent surveillance, border security, and military use cases where long endurance and minimal staffing matter. Financially, 2025 marked a clear inflection point. In the third quarter, Ondas reported revenue of about $10.1 million, up roughly 582% year-over-year, driven primarily by the Autonomous Systems division. Gross margins moved into the mid-20% range, and management has stated a longer-term target of higher margins as software and recurring services make up a larger share of revenue. Operating losses remain meaningful, but net losses narrowed compared to the prior year. The biggest change came in early 2026 with a large capital raise. According to company filings, Ondas completed a roughly $1 billion equity and warrant offering, dramatically strengthening its balance sheet. Here's the trade-off in plain English. They bought time and scale, but shareholders paid for it in dilution. The upside is that near-term funding risk is largely off the table. The downside is a higher share count and potential future dilution if warrants are exercised. Management has guided toward $36 million in full-year 2025 revenue and has discussed a preliminary $110 to $180 million range for 2026. That outlook is tied to a reported sales pipeline estimated at over $500 million. Just remember, pipeline isn't revenue. It's a sales funnel, and in defense markets, conversion can be slow and lumpy. Institutional ownership has increased, with several large firms reporting new or expanded positions. That suggests growing interest, but it also means expectations are rising, and expectations cuts both ways. Looking ahead, a major near-term catalyst is the Singapore Air Show 2026, where Ondas is unveiling its unified defense and security portfolio to an international audience. The Asia-Pacific region is increasing defense spending, particularly around autonomous systems and counter-drone technology, and the company is using the event to position itself as a full-stack provider rather than a niche vendor. Another strategic initiative is Ondas Capital, which management has described as a way to identify and localize battle-tested autonomous technologies from conflict zones like Ukraine for US and European markets. It's an ambitious strategy, but it also introduces execution, regulatory, and geopolitical risk. So who might find this story interesting? Ondas may appeal to investors who are comfortable with volatility, dilution risk, and long sales cycles, and who believe integrated counter-UAS and autonomous systems will see sustained demand growth. This is not a near-term profitability story, and execution over the next year will matter far more than headlines. To recap, the bull case depends on Ondas successfully scaling a differentiated, integrated defense platform in a growing market, backed by a strong balance sheet. The bear case centers on dilution, execution risk, and the challenge of converting pipeline into durable revenue. If you found this deep dive helpful, hit like, subscribe to Penny Stock Pulse, and turn on notifications so you don't miss the next under-the-radar breakdown. Thanks for watching, and I'll see you in the next video.